Start in about 1 minute. Oh, okay. So welcome and good evening, everybody. My name is Leslie. And after I introduce myself and our team and our company and review the agenda, I'm going to provide some context for the offering by talking about the cannabis economy and industry. So this will be especially useful for anyone who did not attend my presentations last week. And for those of you who did, I promise you'll appreciate revisiting some of the market highlights. So first, our agenda. Next slide. So there we go. All right, after introductions and looking at briefly at the economy and the market trends within cannabis, we're going to talk about BaseCanna criteria and some of who we are, and then jump more specifically into the details of each of the 3 offerings, and then we'll move into questions. Next slide. So first, a bit about us. We develop and manage turnkey cannabis campuses for new and experienced operators. And we also support investors to get connected to cannabis deals. A bit about us. We are, by training, real estate developers. We also are lawyers and chief financial officers. And we saw about 2.5 years ago that there was a niche to serve the cannabis industry because there seemed to be a lack of cannabis-friendly landlords. So we saw an opportunity to develop the cannabis campuses to support both new and experienced operators. And one of the features that's special about BaseCanna is that we provide a wraparound service. So experienced and new operators oftentimes need support managing this very compliant, heavy, regulated market. So not only do we provide a place to cultivate, process, manufacture, and distribute, but we also support entrepreneurs and operators understanding compliance, law, insurance, which can be pretty sophisticated. So that's who we are. And let me talk a little bit about our team. Next slide. Oh, actually, let me do this first. What do we currently have in our in operations, and what's in our pipeline? So currently, as we speak, we manage 3 facilities totaling 7 licenses and have about 20,000 square feet under management. Based on what's in our pipeline, we anticipate by the end of 2018 that we'll have 7 facilities, a total of 20 licenses, and 240,000 square feet under management. So a bit about us. So there's Jack, who's the managing director. Leslie and Cabral are directors, and Armand is our director as well. Real quickly about Jack. Jack, you're on the webinar, so why don't you go ahead and talk a little bit about you, and then I'll take over.
I'm going to be very brief. I've been involved in as a real estate manager, broker, developer, and conversion expert for the last 30 years. Developed a lot of and developed and converted and managed a number of condominiums and cooperatives, a total of about 30,000 units throughout the country, including commercial properties and industrial properties as well. And although I do not practice law actively, I am an attorney, as well as a graduate of the Wharton School of Finance, and have had a number of legal aspects, including we managed about $10 billion worth of real estate, receivables portfolio. And that's a bit about me. And now, Leslie, you can take it back for you and Cabral.
Sure. Cabral and I have been developing real estate for about a decade, and the last few years we've been working with a lot of warehouses, multifamily, and retail. We manage about more than 500 units across the United States, and we've also been featured speakers in prominent real estate and networking events. We've been educating both lenders and investors and appraisers for about a year and a half, and have been featured at the ARCView Investor Forum and some other prominent events. Show the picture of Cabral, but I essentially talked about about Cabral. Cabral is our legal expert. Cabral, is there anything else you want to add?
Oh, I guess not. That's okay.
I'll take that as a no. Okay. Cabral's a Stanford Law graduate, and we really love having him on our team. He helps us navigate the regulatory landscapes and make sure that you know, our investments are wise and manage risk really well. So a little bit about the context is important to review that before we fully jump into more details about the offering. So you'll see here that our generation is presented with a unique wealth building opportunity. The cannabis industry is a rapidly expanding industry. If you see here in 2016, legal, rec, and medical cannabis in the United States was a $4.5 billion industry. And you can see that it's estimated by 2026 that US cannabis sales, both med and rec, will be a total of $50 billion. So we just want to kind of contextualize the economy of cannabis before we jump into the opportunities. And the next slide, please. California, it'll be a $50 billion market in the United States, but specifically in California, what's the economy in California? It is the largest cannabis economy in North America, and no one expects that anyone else will replace California in that status. If you look at the last bullet there, California is expected to gross $3.7 billion in sales by the end of this year. And by the end of 2019, sales are predicted to be $5.1 billion. And by the end of 2021, sales are predicted to be $7.7 billion. Next slide. So it's important to understand the cannabis industry and the economy in particular, but it's also useful to understand, well, what's actually trending within the cannabis market. So you see this slide here. In January of 2017, 60% of all cannabis sales were flower, and about 40% were manufactured product. But you can see, if you look back on 2016, that virtually 77% of all sales in cannabis were flower. But you can see that it's trending towards manufactured products. It was predicted that in January 2019, the reverse would be true, that instead of 60% of the market being flower, that would be manufactured products. We're actually pretty close to that number right now. So we're sitting at about 43, 44% of all sales, cannabis sales, are flower, and the remaining is manufactured products. But what's also interesting is if you actually look at the trends within manufacturing, you see that there's edibles, drops, pre-rolls, topicals, concentrates, and vapes. Now, the vape trend is very interesting. You can see that of the manufactured products, vaporizers are quickly grabbing massive market share. Right now, in California, I believe the vape market is about 22 or 23% of all sales in cannabis, and it's expected to grow to 30%. That's what it is in Colorado, which is a more mature adult reg market. So let's think about that. I mean, let's think about that number. In 2018, in California, it's predicted that $3.7 billion will be sold in cannabis, and 80 million of that will be vape sales. So just to give you a sense of the opportunity in this particular market, if you have 1% of that market, the total sales for that market is $8 million in sales. Now, if you jump over to 2021, again, we're expected the California market is expected to be 7.7 billion, and vape sales alone will account for about $2.3 billion. By then, it's expected to be 30% of the market, and 1% of that, all of the vape pen market is a whopping $23 million. So you can see that there's real opportunity within manufacturing, and then within manufacturing, vaporizers. Next slide. So we're often asked, what's the criteria? So BaseCanna manages and develops turnkey cannabis campuses. So how do you choose your location? How do you choose your operators? Well, here's some of the criteria that is important for all of our campuses and operators to match. So we work with operators that demonstrate traction. The particular operators in this deal have had 2 decades of successful past performance within the cannabis industry. That means a lot. It can be very challenging to work with those kinds of experienced operators right now in the industry. The second piece, market opportunity. We want to make sure that we have the right product in the right market. So I can talk more specifically about that, but to give you an example of not the right product in the right market, you wouldn't necessarily pick a cannabis campus in San Francisco to do manufacturing, because it can be incredibly expensive to do manufacturing in San Francisco, and it's much more affordable and a better price point elsewhere in San Francisco, elsewhere in California. Another example of right product and right market is you wouldn't necessarily do an extraction, an 80,000 extraction cannabis, extraction campus in the Bay Area. That campus is better located towards the Emerald Triangle further north in California. The other piece, we look for business-friendly municipalities. Municipalities, in essence, we see them as business partners, and we want to make sure that they support the business to be successful, and that they'll provide potential protections if that's needed. Investors first, the next slide will go in more detail about that. BaseCanna deal criteria also includes compliance orientation. Compliance is essential. We consider that to be, if not the biggest risk, and so we want everybody on our team and all of our tenants and our members to have a compliance orientation. We also ask that our tenants sign a code of ethics and conduct, and we think that especially as this market matures in 3 years, what's going to set some of the winners apart from the others will be sophisticated branding and marketing strategy. All right, so what about this investor first concept? We appreciate that investors are taking a risk participating in an emerging market. So most people have, there's agreement that we can kind of forecast what we anticipate the market will look like in 3 or 4 years. But given that it's emerging, it's a little bit more unclear what it might look like in 5 or 6 years. So we want to incentivize investors to invest and get their money out quickly. So that's our investor first philosophy. So the investor deploys capital, and all the profit, so any money that gets made through these deals goes back to the investor until the investor is entirely paid back. Then after that, 50% of the profit goes back to the investor until the investor has doubled his or her money. And after that, so after you've gotten to 2x, the investors own 10% of the company with dividend payments. And next slide. So before we jump into talking more specifically about the deals, I wanted to talk about Grover Beach and why Grover Beach is special. So Grover Beach is the only city in Santa Barbara and San Luis Obispo counties that have approved both medical and recreational dispensaries. Actually, I think the rec is going to be approved by April or May, and Jack will give the details there. So what's special about Grover Beach other than this campus will be one of just a few places that actually provides cannabis and cannabis activity? It is the only beach in California you can actually drive on. Well, what does that mean? It is a tourist attraction. There are about 2.5 million people that come to this beach during the summer, and another 100,000 that visit monthly. So given that this beach is, that there aren't other campuses and very limited licenses within Santa Barbara and San Luis Obispo counties, which there's 750,000 people that live there, there is an opportunity to grab significant market share. All right, next slide. So the three investment opportunities, and then I believe Armand is going to take it over. So the first one is there's a real estate play. So we have a Grover Beach cannabis campus, and there's three unique investment opportunities for this campus. One is the real estate. Some people may just understand that real estate is an underpinning of the cannabis industry and see opportunity in the real estate. So we're providing investors just a real estate play. We're raising $2.5 million for the acquisition and development of the campus on Grover Beach. The second unique and distinct opportunity is the dispensary. We're raising $750,000 to fund operations. And then the third unique investment opportunity is there's a vape pen. So we're raising a little more than $4 million to build out the manufacturing facility and fund the initial operations at Grover Beach. All right, Armand?
Hello, everyone. Can you hear me?
Yes.
I can hear you.
Hi. So we are, as Leslie said, raising money for both the real estate component to this deal as well as the operating companies. That being said, there are two operating companies, a dispensary operation and a vape pen manufacturing facility. Two facilities to be exact. So what we are doing at BaseCanna is offering a placement into the real estate, into a real estate investment and the operations investment. The benefits of the real estate play are that typically these deals will be collateralized by the real estate assets. So we will, it'll offer an additional layer of security and risk mitigation. In addition to that, it's a way for investors to capitalize on the future growth of the emerging cannabis markets without actually being involved in the leaf, without touching the leaf. BaseCanna will also recruit the tenants and manage each property with professional and institutional management and with proper reporting to investors. Additionally, the operating company offers investors the ability to participate with select qualified cannabis operators. Typically, the funds would be used for equipment purchases, working capital, inventory purchases towards the operations. BaseCanna would typically provide also the turnkey facility that these operating companies would operate in, and additionally manage these properties as well and provide all services. So specifically, we're going to talk about the three deals we have active right now, that being the Grover Beach facility, the Mix Masters manufacturing vape pens, and the Milkman dispensary. The Grover Beach facility in particular has outsized returns relative to a traditional real estate investment with comparable characteristics and traits. We're also offering a rapid amortization on that first lien position, which offers investors a way to reduce their principal balance immediately, quickly, and see that money back into their account more rapid than a traditional real estate investment. It's more of a mezzanine positioning with a first lien position on the debt side, as well as a profit share, both 25% of the operating profits during the investment hold, and 1.5 million in additional profits when the loan is fully repaid by the sponsors. So Mix Masters and Milkman facility operating companies are going to provide investors significant upfront cash flow because the stage of these operating companies is so advanced that we will be up and running within just a couple months. Jack will talk about that shortly. We're also offering the priority of the cash flow until the capital investment has been doubled, which we expect would happen in 36 months. And we're offering a perpetual participation in the company's ownership after that, thereafter at 10% ownership. Next slide. So as we've said, we are raising $2.5 million to fund the real estate facility in Grover Beach, and $5 million to fund both for the Milkman dispensary at $750,000 and the Mixmasters vape pen at $4.25 million for both a facility in Grover Beach, which we've discussed, and another facility in Culver City in Los Angeles, which Jack will discuss in the further slides. Next slide, please. So just to go over the team behind these projects, both on the Mixmaster side and the Milkman dispensary side. Brennan Thick is the CEO and founder of Mixmasters. Brennan has been an industry leader for over 20 years. He's been cultivating under California law since 1997. He's been a master advisor and consultant on grow facilities in excess of 20,000 square feet in size. He has 18 tested and popular Los Angeles strains out on the market. He has, since 2006, actually been in the dispensary business. He founded and built Venice Beach Care Center, which is one of the highest grossing dispensaries in Los Angeles for over a decade, and has the only one to have received 7 certificates of appreciation from the city itself. He's also built a West Hollywood dispensary, Cannacology, which was sold in 2016. Both of his dispensaries were sold to MedMen Enterprises, which is the cannabis industry's first unicorn company with over $1 billion valuation. He sold 2 of his dispensaries to MedMen for over $10 million over the last couple of years. He's a known operator, advocate, and public figure in the cannabis industry. CNBC recently featured him in The Profit in Marijuana Country in January with Marcus Lemonis. So we're very happy to have Brennan on the team, and excited for what he's building at Mixmasters, and his ability to build the dispensary and choose products appropriately give us faith and investors confidence that he can choose and curate the right products for the right markets. Thomas is the founder of Milkman Dispensary. He founded Milkman Collective Delivery Service in SLO County in April of 2015, and since then has built the dispensary, the delivery service, to the #1 medicinal delivery service within the county for the last 2 years. He's developed an exceptional reputation locally within the market of Grover Beach and San Luis Obispo County. He also has 20 years of professional sales experience and earned a bachelor degree at UCal Santa Cruz. He is a very well-known local operator in Grover Beach and has great connections in the area. Now I think Jack is going to take over the Grover Beach details and walk us through the deal.
Welcome everyone, Jack Boyajian here. I'm going to try to go through the details a little bit more rapidly than I normally would, only because I don't want to necessarily bore you. And this webinar will be online and available to you for your review if you want to look at more of the details and the numbers that I'm going to present. So I'm going to just highlight for you the most essential, important areas that I think need to be emphasized and focused on, at least on this presentation. So as we discussed, there are 3 deals. One of them, and the first one I want to discuss, is the real estate play. This is an investment in the real property. We're going to purchase the property for $2.5 million. The seller is going to give us a $750,000 note, and so we're going to use the $750,000 out of the $2.5 to actually build out the facility from what its current use is to a full retail dispensary and an extraction facility for Mixmasters. So the dispensary will be utilized by Milkman, 2,000 square feet. 4,000 will be behind the dispensary that will be used by Mixmasters to develop the vape pens. So we are going to have 5 licenses. March 5th, the license was approved. 3 licenses in that facility: retail, distribution, and manufacturing. Retail will also include delivery, by the way. So not only is it going to be on-site dispensary, but also we're going to be able to deliver anywhere in both counties, Santa Barbara County and SLO County as well. And as discussed, this is the only town that within the 60-mile radius that actually will have retail cannabis sales, at least for now and in the foreseeable future. The great news about this is that the real estate play is a 3-year play, essentially doubling your money in 3 years if you're an investor. And that equates to a 30% internal rate of return, which is exceptional by any standard. So again, Grover Beach is a treasure in the California market because of its position and its location, as well as centrally located to both South and Northern California. It has a tremendous population that explodes in the summer and over the weekends, even all year round. And the competitive landscape is that there's only going to be 4 dispensaries in Grover Beach, and we're one of them. Milkman is one of them. And we are actually in a very good location. We're actually in the area of the first entry into the Grover Beach, whereas Monarch will have a more prominent presence in the second entry. So coming from the south, we're closer than just about any other dispensary. But more importantly, we're going to have better products. With Brennan participating, he's going to know what products. But this is Brennan Thick that had those dispensaries with MedMen that bought those. Tremendous capable capacity to identify the products that the consumer wants and properly pricing them, properly displaying them. So it's gonna be a competitive advantage to us. So for the real estate deal, we essentially have the members, in this case Milkman and Mixmasters, contributing on a monthly basis at the rate of $20 per square foot. Now that is high, but it includes everything with a turnkey operating facility. So that would include all services like insurance, property taxes, maintenance, financial services, even utilities. So at the end of the day, and security, of course, security being one of the most important aspects and highest cost, and payroll as well. And that will generate approximately in the first year $900,000 in net operating income. And because of our very fast and rapid return of investments under our investor first concept, $530,000 roughly will be given back to our investors who put in $2.5 million. That also includes a 12% rate of interest on that mortgage. So first mortgage on the property will earn 12% rate of return. If anyone knows the mortgage market, you know that a more customary rate of return would be around 5%. We're giving almost 2.5 times that to our investors on a return that's very rapidly returning the investment dollars, as well as a very high rate of return. The second mortgage is the $7.5 million that I mentioned is being contributed by the seller, taking back that note. It is subordinate to our investors' money. So again, another indication of our investor first concept, where our investors will be ahead of anyone else. So so the first $500,000 of profit, $530,000 goes to our investors. And if there's money left over, we'll pay our second mortgage. And then with the money left over from there, we will give 25% of that back to our investors as well. So during the investment hold period of 3 years, you'll see that every year our investors will receive essentially 1/5 of their investment back. And at the end of that period, at the end of the 3-year period, they will also receive not only the ownership of 25% of all proceeds, but also the full principal repayment of whatever's left on the $2.5 million investment, and a $1.5 million cash bonus in profit. So at year 3, at the end of year 3, at the end of 36 months, the entire investment is returned, along with a $1.5 million bonus return, equating essentially to a multiple of almost 2.0, 1.99 to be precise. So tremendous opportunity, secured by first deed of trust, extraordinary returns. And again, this is done because we're in a business where cannabis margins are profitable enough where our members can pay $20 per square foot per month, along with all, inclusive of all services, essentially allowing for a very, very rapid return of investment to our investors, capital investment to our investors, as well as an extraordinary profit. Let's talk about the Milkman dispensary. Again, this is a $750,000 investment. By the way, all three investments, you can invest in all three of them, or only one of them, or two of the three, whichever you choose. We've done this because we know that investors have different profiles, different risk profiles, different risk aversion and risk loving. So we want to provide every investor with several different opportunities in the same project and in the same campus. And hence the dispensary opportunity of $750,000. This is invested through a separate entity that will operate the dispensary. So you will be the investor in that business if part of your investment goes there. So again, this is where we hope to have a beautiful dispensary, and you can see some of the pictures of the dispensary outside and inside, and a picture of the Grover Beach sunset. So the dispensary will operate with high quality products that will be on display with bud tenders behind the counter, helping our clients, as well as the delivery service. It's going to be hopefully delivered by this summer, during the high summer volume season. We hope to have the dispensary open and operating by June. And the use of funds will be to basically fit up the facility with equipment, stock the shelves with inventory, and provide about 6 months of working capital. Now, the reason for that is that all that inside work that you see in the picture up top on the top right corner will be done by the real estate entity, because it's going to overdevelop this property and hand the keys over to Milkman, essentially not having to do anything internally except stock those shelves, get their cash registers in there, and have enough money to pay the rent and pay the staff for up to 6 months. Not that they'll need that. We expect sales to have to come on very strongly, and to the tune of about $500,000 a month, especially during the high summer season, and may even exceed that significantly. There are some projections that are realistically looking at a dispensary there doing $750,000 to $1 million in the exceptional months of maybe July and August. So our numbers are actually quite conservative, and even with that, it's an extraordinary return. Now, Milkman, as was pointed out with Thomas's guidance, has received a number of awards for delivery services, and Tom is an exceptionally well-crafted and a great gentleman who's done a great deal of work with the city as well. Enjoys a tremendous reputation within the city, and this has been. He's also partnered, by the way, with hand-picked growers that have 100% organic history and legacy. So let's look at the numbers. We expect a very, very conservative $4 million in gross sales in the first full annual year, and with even a rent payment that is that's going to support the real estate play of $480,000 in a 2,000 square foot facility, and the cost of goods sold that's actually very conservative, based on a 55% cost of goods sold. The industry average is more like 40. Leaves a profit of $1.3 million projected profit, and even after those expenses that are not covered by the rent paid to the real estate entity, the profit here would be approximately $716,000 in the first year, $885,000 in the second year, And there is I'm sorry, that's before BaseCanna's membership fee, which is 2% of gross revenues, but $633,000 in the first year, for example. And let's see how that's distributed. Out of the $633,000, guess how much goes to our investors? All of it. Again, investors first. So we're giving you all the cash profits until your investment is fully returned. After that, everything is gravy because we've essentially returned your money as quickly as we can, giving you 100% of all income, and then 50% of all income on the next after you get your full return of capital. Half of all cash flow after that also goes to the investor until you have doubled your investment, 2x. And after that, you have a 10% tail and ownership in the dispensary forever, in perpetuity. And so even in the most conservative light, in the conservative projections, the dispensary is not only going to return all of your investment and twice your investment within 36 months based on our projections, but then after that, after you received all your investment back, you're gonna be enjoying a 15% return essentially forever, or for as long as the dispensary is in business, at a very conservative rate. If sales double, you're going to be looking at probably 3 times what is being projected here, because all those profits will drop to the bottom line. And so the returns are extraordinary. And again, you have the ability to enjoy a wonderful cash flow even after you've doubled your money. The Mixmaster manufacturing operations, as mentioned, there are basically 2 operations that the $4.25 million in raise are going to help fund. This money is going to go to essentially purchasing equipment, extraction and distillation equipment, particularly working capital, inventory, as well as staff and initial startup costs. The vape pen market, as Leslie mentioned to you, is growing by leaps and bounds. The highest segment of growth actually within the cannabis industry. The competition is there, and we will talk about that a little bit. But the competition is met well with the fact that Brennan Thick has developed a vape pen that essentially has unique flavors, some of which are patented. And unique ability to microdose and provide different kinds of impact for those who choose to have certain types of sensations when they're smoking. And these pens are beautifully designed, just absolutely gorgeous. If you hold them, it's the size of a pen essentially, and it's quite disguised well. You can put it in your pocket. You can walk around with it. They don't need charging. They're fully disposable. But the company is also going to make cartridges that can be fitted into pens that are also sold in most dispensaries. This business is probably the most profitable in terms of the margins. The margins are quite good. Almost 2.5 times the cost is what the product could be sold for. And we talked about Brennan's background. Mixmaster's custom blended products are geared to the music industry, particularly A-list musicians are now we were negotiating with them to license products that are specific to them. They'll choose the flavor and the terpenes that they want, and then their name goes on it. And so they will be co-branding, if you will, with Mixmasters for their own followers and those who ideally look to these musicians for lifestyle impact. And that's going to be a tremendously important and differentiating aspect of Mixmasters as compared to all the other vape pen companies. I don't know of any others that have this potential penetration into the entertainment industry with co-branding and co-licensing arrangements. And it is I think the most important aspect of Mixmasters, besides their product. Their product is exceptional. we've privately test marketed with focus groups, and the extraordinary in terms of the response, absolutely extraordinary. So with respect to mixed masters and the opportunity, a couple of key points. It's going to have these two facilities, one that will support the northern part of the state with Grover Beach, and the one in Culver City will generally provide the southern part. Culver City should get up and running pretty quickly, probably sometime by September. The facility has already been leased, and the funding will help to get it all ready to go into production. We already have raw supplies, raw material supplies, which is unusual for up to 6 months of inventory. So we have, each facility can produce eventually up to 75,000 pens a week, or essentially 3.8 million pens per year, which we would hope that over the next 2 to 5 years, or 1 to 5 years, will be easily absorbed into the market based on some of the stats that I think Leslie shared with you. We have already agreements in place to get into 600 dispensaries where we will get shelf space, which is the biggest challenge, by the way, of any startup in the market today, is getting shelf space on that dispensary and being able to have the right distributors getting you into that market. And with the Musician's Choice branding, as I discussed, that's going to just propel us into these stores and then get these products off the shelf and reorders coming in very actively. And the founder, being Brennan, has actually already invested about $500,000 of his money into equipment deposits, purchase agreement deposits, 20,000 vape pens ready to go, and package design and initial production, licensing, and all of those things are already set up, ready to go, which basically cuts down the risk and the time from investment to market to cash flow. Very important aspect, very important difference in this investment as compared to others in the cannabis industry. So our plan is to start in California. Grover Beach is obviously one of them, Culver City, and then the product and Mixed Masters itself predominantly expects to go nationwide and international. And very important, as an investor in Mixed Master on this raise, your interest will be continued not only in the state of California, and not only in other states as well that are currently cannabis friendly and allowing for cannabis medical and recreational sale, but all states and beyond internationally. So you're not just investing in California, although that's all the numbers are presenting. We're only limiting our presentation to you on the potential of just California. But once this Mixed Master product goes nationwide and international, which by the way can happen within 2 years, if not less time, meaning certainly internationally, and certainly international, not much longer, not much further beyond that. So as an investor, you are not going to be limited to only California. You're going to have participation in all national and nationwide and international profits. So on the manufacturing Mixed Master production, notice something. We project grams to be sold starting at 600,000 grams today to 2.1 grams by year 5. But look at the price. The price we're projecting to be declining because the market will push down pricing. And so we're being conservative and expecting our per gram sales to go decline. And even with that, we are projecting 12 million starting in terms of annual sales, all the way up to almost $35 million in sales. And then after rents are paid to Culver and Grover under the BaseCanna model and cost of goods sold deducted, gross profits will be approximately $6 million in the first year, $10 million in the second, and beyond, of course, greater as the years go out. And even after costs of expenses, not including those that are paid by the real estate company through the base rent, but also all these other expenses. We expect almost $4 million available. I'm sorry, $3.3 million available in year one. And again, like the others, where does that go? Investors first. The entire amount of $3.39 million that we project in year one goes back to our investors. So imagine that they're almost getting, out of the $4.2 million, we project nearly 78 or 80% of that money back to them in year one. And in the year two, all of the remaining portion of their investment will be returned, and then beginning to get 2x of their money in back to them. And probably sometime around the middle of the third year, maybe the 33rd month, maybe the 30th month, they will have the investors will have a doubling of their entire investment, and then beginning to now participate and enjoy the fruits of that perpetual ownership of 10% going forward, which in this case is a projected to be almost 29% return on the original investment that you got back in almost the whole sum in year one, and that doubled in year 2 and 3, and now based on that original investment, it's a 29% per year return. Extraordinary. Maybe too extraordinary, not so. We've conservatively estimated not only revenues but also expenses, projected a decline in our per unit pricing. And so even with those very conservative numbers, we're still seeing a tremendous return to the investors. So we have been receiving, as we've had this webinar proceeding, a number of questions coming in. And so I want to take some of those questions and then open it up to those who might have additional questions as well. So the first question that has come in is, what is the minimum investment, and do we need to be accredited to invest? The answer is the minimum investment is $75,000 in investment, which you can choose to invest in either 1, 2, or 3 of the projects. We will accept them into any of those 3 or all of it into 1. You do need to be an accredited investor, which means that you must be accredited by an independent third party. And that would, and if for those who don't know what accredited investors are defined as, you need to be either have $1 million in net worth, excluding your primary residence, or you need to have earned $200,000 individually or $300,000 together within your household if you have one, and that would be for the last 2 years. So if you are not accredited, you cannot participate in this offering. This is a 506c offering, which requires only accredited investors that can invest. Another question was, the market is emerging and will be even more mature in 3 years. Who do you expect will be the winners and the losers? And I guess particularly, there was another question by that same individual, but I'll take that next. I think it's anybody's guess where we're going to be in year 4 or 5 or 6 of this in this industry. I think most industry participants and experts would say that in the next 3 years, the regulatory landscape will become much more clear, and hopefully the enforcement of those regulations will be fair and equitable, and all based on everybody going legal, particularly in California. But I think the biggest winners will be the consumer, because I think prices will go down, product quality will rise, product innovation will be strong and expansive. I think the losers might be some of the smaller farmers that have always relied, at least in California and other locations, on the black market taking their product. So that has provided them with a great deal of income. But the other side of that coin is that they've had to earn it in a cloud of doubt and fear, and actually illegality that could have put them and their families in great jeopardy. The good news is that the smart farmers, those who are willing to be creative and innovative and hardworking, can go and get their licenses and now be in the light and produce great quality product and earn a very good living in a legal form, in a legal way. But I know those that will lose are those that won't adopt those new measures and become legal, and they may be bigger losers than just financially. They may actually lose their security and their freedom. Another question was, everyone wants to be part of the vape pen market. Isn't that going to be a very competitive landscape? And yes, it is. It already is. It's not going to. It already is. California may be aside because California has a shortage of product, as much as it has a lot of people wanting to come into California. Keep in mind, you can't import anything from Washington. You can't import anything from Oregon or Nevada into California and sell it here. What grows here has to be sold here, and what's sold here has to grow here or be manufactured here. So in that sense, the problem is there's a lot of growers and participants in California, but they're not legal. They're not legal yet. So there's only a few legal, a small fraction of the participants have now gotten both their local and state licenses. But unfortunately, that isn't enough products coming to the dispensaries. The word from the street is that the dispensaries are running out of product and need it. And that's why Brennan, having brought the Mixmasters this close to launch, being able to have product already available for sale, and can produce another 100,000 vape pens and cartridges within 30 days of funding. That's tremendous, because now Mixmaster is going to be available on the shelves of dispensaries when other products are not there. And that's going to create a tremendous advantage in having having the brand adopted by many users, and that's obviously a great lead off. The others are going to be followers, and they're going to have to play catch up to Mixmasters. And the other aspects of the vape pen competition is, I mentioned it, Brennan's product is exceptionally unique in the sense that it has different flavors that are patented. It's going to have the musicians number one brand as its general category, and then its relationships with these musicians and its licensing agreements are going to be tremendous advantages in that competitive market space. There's a few other questions. I'll ask the question, and then I'll ask my colleagues to answer them. Let me suggest maybe Leslie, if you can take this question: how will the microdosing trend impact Mixmasters?
Jack, let me pause because I know we're getting close to 7, and I want to just see if there are other questions from anybody that's on the webinar.
Yep.
And yeah. Yep. You can type in your question, or you can unmute yourself and ask.
So Leslie, maybe as people are thinking about it, can you take that question on the microdosing, or?
Sure. There is a trend towards there's definitely a need in the market for there to be more accurate microdosing. And there's that need exists, you know, for the medical and the recreational market. And Brendan is anticipating that market expansion and is preparing for that with Mix Masters. So he's paying attention to that trend in the market, and he's also preparing for it.
Okay.
You know, there's a desire to kind of capture the soccer mom, you know, or the professionals are doing a lot of microdosing, and you know, the professionals are attracted to vape pens because of the discretion and because of the movement towards better technology towards microdosing. So Mix Masters is aware of that trend, is anticipating an expansion in that part of the market.
Thank you, Leslie. Cabral, maybe you can take this question. How are you protecting yourself from potential liability due to federal prohibition? I think the question is actually, how is Mix Masters or BaseCanna protect, you know, what are they doing to protect from liability that might come from federal prohibition?
Sure. Can you guys hear me?
Yes.
I'm unmuted, but I'm not sure. Okay. Yeah. Well, I think that there's a few things that are important. First of all, starting with location, working with municipalities that have fully established local ordinances and municipalities that want to see well-run, compliant cannabis businesses operating within their municipal areas. The key issue with respect to protection from the federal government is to be fully compliant with local and state licensing rules. If you're fully compliant with local and state licensing rules, it doesn't mean that it means that you are not, there's no reason for you to be a target from the federal government or from the local government, because the local government will want you to stay and participate within the local economy. A lot of these local municipalities are really looking to cannabis to help fill their coffers, especially cities and counties who have limited other ways to raise revenue. So when I say being fully compliant, I don't just mean doing everything that they say that you have to do. I mean getting to know the people within the municipalities who are making the decisions, becoming on first name basis with the police officers and the fire departments and the people in the planning department and the people in the building department, so they know you and you know them, so that when you're operating, they will be looking out for you essentially, and that's really really the most important way to stay safe. Ultimately, you know, I've had conversations in addition to these opportunities that we've talked to you about today. We do have lots of experience in other markets, and some of the experience that I've personally had with police officers is conversations about how they are happy that we're there operating legally, because it gives them the cover they need to get rid of the illegal operations. And I think that is, more than anything, is what you're going to see in municipalities, is if the feds want to bust people, the municipalities are going to use them to bust the illegal operations that are not providing tax base. So I think that's the most important thing that we're doing, is we're starting with municipalities at the very beginning, and we're working with them to be the example of how to run a compliant cannabis operations in their cities.
Okay, thank you, Cabral. That's good information. Armand, maybe you can answer this question. Given the number of investment opportunities that are available, why did BaseCanna choose Mix Masters and Milkman to sponsor and support? And maybe the slide I'll come up to, and maybe you can refer to it, that Leslie had I think run through, was some of the standards that BaseCanna looks at.
Yeah, well, there is a number of operators out in the market, especially those that are raising capital. We specify a number of qualities when we look for operators to take space in our facilities, and also those that we raise money for. Specifically, Mix Masters, demonstrate a tremendous amount of traction in previous experience, as well as in the actual stage of the company. Mixmasters, led by Brennan Thick, is well along its way in terms of product development stage. So we believe that being well advanced in that stage demonstrate that they are committed to the investment, that they've built some sort of awareness and interest in the market for their product, which Mixmaster has with their advanced stage of branding as well as their product development. So Mixmasters also has prior experience leading up to the Mixmasters company. Brennan has demonstrated over 20 years of experience in the cultivation business as well as the dispensary business, and sold to institutional players in the market. So a tremendous track record on the Mixmaster side. And the Milkman side, having a local operator in such a small, constrained market like Grover Beach, with high volume and high turnover each year, we believe that having a local market player with favorable connections was a crucial component to our first facility and a major cannabis facility in such a emerging regulated market. So we believe Thomas at Milkman is demonstrated extraordinary traction prior to Milkman and in their current stage of development.
So Leslie, maybe you can take this. The branding really looks great, as we presented it. But can you tell us how people are responding to the actual product? Do if you can, I guess, speak to the anecdotal side of it and also some of the, the test marketing that's been done?
Well, I want to acknowledge that it's after 7. So there may be some people that were anticipating us closing out. So what I'd like to do is maybe Jack, you can close it down for those who want to stay on, and I can answer that question. We can answer other questions that people have, but I want to,
this was going to be the last question. So why don't you just take that really quickly, and then I'll close it out, because I imagine there's no other questions coming from the participants. We have we have other questions, and we'll take them on the next webinar that we do. But if you can answer that question really quickly, then I'll definitely close it out for all of us. So the question was, the branding looks great. Any idea of how people have responded?
What I can tell you is that Brennan is really driven to make data-driven marketing decisions, and he's paying attention. He has 2 decades of experience testing the consumer market and following the consumer market trends. So I know he has done some testing of his product and has been incredibly well received. We're asking him to quantify that a little bit more, so we should probably have some more information or a press release specifically on some of the qualitative data that we're getting from those focus groups. But that's how I would answer that for now.
Great, thank you so much. I want to thank everyone for joining us on this webinar. Really had a pleasure. It was our pleasure to talk about the BaseCanna facility in Grover Beach and the opportunity to participate in investing in Mixmasters and Milkman. We enjoyed giving you information about the cannabis industry overall. I hope you learned a little bit about the industry that you didn't know before, and that you might be interested in helping to bring these opportunities to the Grover Beach marketplace and participating in an extraordinary opportunity to earn not only 2 times your investment, but also a perpetual participation in the profits of these 3 distinct investment opportunities and businesses. If you want to invest, please contact us by sending us an email at, you can send me an email at jack@basecanna.com, or any of the four of us, and you can come back and we will publish this webinar on online that you can watch again and at your leisure and at your pace. And we will also announce additional webinars in the future for you to participate in, whether it be for Grover Beach or other opportunities in the BaseCanna pipeline. Have a good night. Thank you again.
Thanks, Jack. Thanks, everybody.
Thank you.
Thank you for coming.